Sell all of your stocks and buy gold.
You sure about that?
Hi everyone, I'm Marc Lichtenfeld, Chief Income Strategist of the Oxford Club, and no, don't sell all of your stocks and buy gold. I am not one of those gold bugs that always think stocks are going to crash and gold is going to go up no matter what is happening in the market. And let's be clear, a lot has been happening in the markets. That being said, I'm bullish on silver and even more so on gold. Over the last 10 years, neither has been a good investment. While the S&P 500 returned 200%, including dividends, or 213% with dividends reinvested, gold had a total return of just 36%, while silver returned a paltry 4% over 10 years. Since the beginning of the pandemic, though, gold has done okay, up 25% in 3 years, while silver has rocketed 58% higher. Now, over the past year, while the S&P is down 4%, gold and silver are up 5% and 7% respectively. But so far in 2023, silver has lagged while gold has led the way.
My gold, my kingdom, everything for the golden touch.
Okay, simmer down.
Give me gold, not advice.
As I said, I am not a metals permeable, but I like them now. Gold and silver are useful hedges against inflation long term. And before I explain why, if you haven't done so yet, why not subscribe to this channel? It's a rather invaluable asset in this economy, getting weekly financial tips from top market experts. Okay, back to metals. Interestingly, silver tends to go up with the overall economy due to sizable industrial demand. Now, many people are calling for recession and have been for a while, yet silver has performed well. Gold has likely been climbing in conjunction with and anticipation of higher interest rates. Now, I suspect the recent moves in both metals are just the beginning. Both metals are emerging from long bases on their charts. Now, a base is an area of mostly sideways movement when a stock or commodity takes a breather from an uptrend or downtrend. The longer the base, the stronger the move typically is when it breaks out. Now, silver broke out above its base at $22 an ounce, and I expect it to move sharply higher over the coming months. Gold looks even better. After climbing from around $400 an ounce to $1,900 an ounce between 2003 and 2012, the yellow metal called a decade-long timeout, creating a 10-year base and entering a pattern known as a cup and handle. This is a very bullish pattern. I believe gold will hit $2,600 an ounce and maybe much higher over the next few years.
Great news, right?
The last time I was this excited about gold was in 2000, before it made a gigantic run higher. I barely noticed gold for the last decade, but that's changing now, as it could be one of the great plays over the intermediate term. If you don't already, make sure you have some exposure to gold and silver in your portfolio. That's it for today. Thanks for watching State of the Market. I'm Marc Lichtenfeld. I'll see you next time.